Just looking over your notes, I think it's a very pragmatic view of what's happening. Might not be totally out of consensus, but very pragmatic, and that is that we have an idea of what reopening looks like, and it gets us back probably to maybe 80 or 90% of where we were, the post-COVID lockdowns. And the market is obviously excited about that and is reflecting that, but maybe has reflected it to a great extent already in where prices are, although not overly expensive at this point. So stay in. That's the default trade. But I don't know, should you have a toe out the door, would you say?
Absolutely, Joe. I think you encompassed it really well. We're really seeing a situation where we think if you look at 12 to 18 months, that really equities should continue to have a nice hand. And the reason why is we're being able to pick up the economic activity and consumer and corporate behavior is really being able to normalize. But to your point, we've had some nice run up in prices already. And if you just graph prices relative to earnings, what you see is a little bit of a gap, a jaw opening up. And so we need to continue to see those earnings numbers continue to come in and justify some of the uptick that the market has already experienced.
Gunjan, you make some serious some similar comments that it has to do with earnings. We're not through the entire period. I don't even know if we're halfway yet, but that's still something to watch, something to base decisions on.
Yeah, it's still early in the earnings season. A lot of investors I've been speaking to have been surprised by just how resilient this market has been. There was a WSJ analysis recently showing that the number of stocks in the S&P 500 trading above their 200-day moving averages hit 95% last week. That's the highest level in more than a decade and really highlights that this rally has broadened out a ton. And to some investors, it's a sign that the rally is actually healthy because so many stocks have been participating in it.
But you also point out that there's some craziness, there's some froth, and there are some, you point out under the surface, even though you're seeing a broadening, there are other signs of maybe trouble or fragility. Like what?
Definitely. I mean, just take a look at, Dogecoin, right? It seems like the broader market is calm, and then you see these speculative assets just going crazy and gaining, thousands of % on the year. So there are definitely things lurking under the surface there.
But I guess that begs a question, Lisa. When you look at, you're the perfect person, traditional investing. I saw that. I like that. That's the name of what you try to focus on. Can there be segmented markets? Can there be, reasonable equities with Graham and Dodd analysis and dividends? And can they exist and have valuations separate from what we're seeing in GameStop or SPAC land or cryptocurrency? Can there be froth one place and it's not going to seep into the valuations on traditional investments?
Absolutely, Joe. And to Gunjan's point, we have seen a few areas of the market where there does seem to have been a little bit of excess in terms of investor enthusiasm. But generally, when we look at the market as a whole, what we see is some healthy sentiment measures where investors are positive, but again, generally not at extremes. So to your point, we think that puts together a really nice environment where, again, there's some momentum behind the majority of what's going on with U.S. equities right now, but it's not at a frothy level.
Yeah, I would think, Gunjan, that both of those, even though they're segmented, they both have the same fuel, and that is Jay Powell and the Fed. It's got to be supporting assets across the board. And if it were to reverse or if rates were to move higher, I think you might have trouble once again across the board.
Look, people want to take risks out there, and I think that's clear from this year, right? No matter if it's in the stock market or with Dogecoin, people are willing to take risks. But what's interesting to me is that there's even a divergence in the speculative corners of the market. Take a look at SPACs. Those have cooled off a lot. At the same time, some of that really bullish options activity that we saw earlier this year, where people were piling into these lottery ticket bets on stocks, those have cooled off a lot. But then still you've seen, the run up in Dogecoin and other things that we just discussed.
Shepard Smith here. Thanks for watching CNBC on YouTube.